When you looked at the numbers here, the company had pre-announced, but how did it compare with the pre-announcement, and what did we get for outlook?
Slightly better than pre-announcement. Remember, because they were in the midst of a heated takeover battle with Qualcomm, they took the unusual step of not only guiding to Q1, but also for Q2. So both Q1 and Q1 numbers and Q2 guidance came in slightly better than their pre-announcement. And here we are. We're done with the first quarter of their fiscal year, and they're already ahead by 19 cents. For the full year. So business is good. And one of the things this is where the diversity of revenues for Broadcom really comes in handy. Q1 was powered by the iPhone cycle extending out, but seasonal declines in Q2 in the wireless business, in the iPhone business, but the wired business comes in stronger, offsetting the wireless business. So you had a better outlook for Q2, but for a totally different reason. So this is where the non-monomaniacal approach, non-handset-only approach kind of helps out Broadcom.
Okay, so obviously Qualcomm, that's never going to happen, but people still wonder whether it's plausible they'll make bids for smaller chip companies in the U.S. Maybe those won't be as sensitive. Is there an area in their product lineup that they need to, a hole they need to fill? And are there acquisitions that might make sense for them at this point?
That's a great question, Joe. The interesting part of Broadcom is that, look, this is in the long run a GDP-esque top-line growth company. Okay, earnings can grow potentially faster than sales, but we're still talking single digits. So they need the M&A strategy in order to make their long-term growth model work. That said, the biggest holes in their portfolio are they're underexposed to industrials, underexposed to autos. They're still heavily in communications, two different kinds of communications, but industrials and autos are big areas that they could look to fill. And if you look at that, so we've talked about this, companies like Microchip or Analog Devices have often been speculated as potential takeover targets for Broadcom. It's unclear whether CFIUS comes into play there, given that they've been earmarked as a CFIUS problem child, if you may. But those are the logical acquisition candidates.
I like the way you put that, CFIUS problem child. Julie mentioned that it'll soon be listed in the U.S. Is there any way in which, or any reason that Broadcom would say, you know what, we don't need to be listed in the U.S. We'll stay in Singapore. Thank you very much.
Actually, technically, they're listed in the U.S. Both the precursor to Broadcom, Avago, as well as the company that it bought, were all listed in the U.S. So it's listed in
the US,
but domiciled in the U.S. versus Singapore. Look, they moved out of the U.S. and domiciled to Singapore for tax reasons. Now that the tax reasons have purportedly gone away, they're coming back. It all makes sense. But then if the acquisition strategy is blocked, then you have to take a look at the bigger picture. The interesting part is U.S. companies, from an acquisition standpoint, are still the big game. If you look at Japan, if you look at Europe, those are less likely acquisition targets. There are more protectionist sort of areas, and the margin accretion isn't as solid in those areas as it would be in the U.S. And those are easier. The U.S. companies might be easier fits, quicker fits, if you may, relative to both the Japanese or the European targets.
Broadcom, as part of this earnings announcement, also announced this quarterly interim dividend of $1.75 per share. Presumably, that's sort of a consolation to investors.
Absolutely. Look, this is from an execution perspective. This is a well-oiled machine. This is a company that can acquire assets quickly, roll it up, quickly divest businesses that are not core to its operations, and also harness the cash flows and the earnings power of the company. So not surprised at all from an execution perspective that they're doing this.
And now, big picture, chip stock's doing incredibly well, very close, if not right at all-time highs right now. It's blown people away, the length of this cycle, and the fact that margins just don't seem to be coming down. When you look past all this quarter's earnings, are there any threats to the story?
Look, you have to look at it it's almost a bipolar approach to looking at it. On one hand, you can say that semiconductors are the new industrials, the new building blocks of American economy, the global economy version 2.0. Option A. In that case, you can argue that earnings power still remains, albeit multiple expansion potential is low. The second way of looking at it is a typical semiconductor boom-bust cycle, and by that token, you have to be a little nervous, particularly in areas like memory, which are terribly commoditized. But thus far, it seems strangely rational. It's scaring people how rational it's been for how long it has been.